went into the negative territory, recovered quite sharply, almost 100-point recovery, and after that now once again trading near the day's lowest point. But let's now move on to a very interesting discussion. ICRA expects the road execution to grow 5 to 8% in FY25. It adds that execution momentum will sustain in FY25. We have Ashish Modani, the Vice President and Co-Group Head Corporate Ratings of ICRA, joining us now to discuss further. Good afternoon, Ashish. Thank you so much for joining us. Well, one particular complaint that has been there as far as road activity is concerned is that NHAI ordering in FY24 was quite muted. So what do you have to say to that, and what makes you optimistic as far as FY25 is concerned?
Good afternoon, Vivek. While there is definitely a point regarding decline in the order book or order awarding from NHAI, but this is expected in all the election year. We have seen in FY14, FY19 also similar trend has been observed. But if you look at the overall order book, which is currently there with majority of the road contractors and developers, that remains very comfortable. Because of the good order book and also strong outlay from the ministry, we are expecting 5 to 8% growth in FY25, and we are very confident on it. Because if you look at last year in FY24 start itself, we have told that order will decline. And the decline is largely in line with what we anticipated earlier. At one point of time, we were expecting around 7 to 7,500 order awarding. So overall awarding at the year end was actually higher than what we initially anticipated. So awarding was, while it was expected to go down year on year, it still remained higher than what we have initially estimated. And if the current order book with all the road developers remain pretty strong, and we are expecting the things to ramp up quite substantially post quarter two. So basically quarter one is always a lean quarter. Quarter two, again, because of the monsoon, the construction activity get hampered. And we expect a very strong ramp up again from quarter three onwards.
Okay, so you expect ramp up from quarter three onwards. So far in FY24, it was also impacted because it was ahead of the election season, as you mentioned. The other thing that's happened, Ashish, is road developers have said that intense competition is impacting returns. What do you have to say about that? Is there intensity in competition, and is it something that would impact the entire industry?
Sonali rightly talked about the competitive intensity. Our ICRA analysis also highlight the same thing. If you look at the discounting which is happening in the sector, it's unprecedented. Overall, median discounting which is happening is almost 20% below the authority base price. So the competitive or competition remains extremely high. So if you look at the overall industry profitability also at the construction entities, it is unlikely to go or rebound to the the pre-COVID level. So competition has significantly gone up. But at the same time, the fund or the working capital cycle remains very stable. The funds are coming timely from the authority, and that is one of the very positive steps taken by the government during COVID times, and that has continued to support the cash flows of the road developers.
Ashish, one more question. You said that FY25 you expect awarding as well as execution to improve over FY24. You also mentioned that in an election year typically or a pre-election year you do see awarding activity moderates. Now Q1 that we are in currently of FY25, given the fact that the election code of conduct is in effect, we understand that ordering activity once again will come to a halt. Also, like you mentioned, we are going into the monsoon season as well in a couple of months. So do you think Q1 and Q2 could be a bit of a washout when it comes to to the entire road sector?
Quarter one will be subdued, definitely, Vivek. But we expect things to ramp up because even during the monsoon, awarding activity will not get hampered because of the monsoon, right? Execution may get hampered. If you look at the last 5-year track record or first 5-year numbers, let's touch on some numbers. So quarter one, generally the execution is somewhere around 20% in the overall targets and 15% in quarter two. So the remaining almost 2/3 of the execution happened in quarter three and quarter four itself. And for the last year in FY24, 50% of the execution happened in quarter four of FY24. So the execution has significantly ramped up. And that's why we are confident that the things will continue to remain strong in FY25 as well. So while awarding may be very muted in quarter one, but awarding again once the new government is in place, because if you look at our recent commentary, ICRA has highlighted that 45,000 kilometers of project pipeline is already there. so which will ultimately get awarded. We are also expecting a decent amount of ramp up or in the toll projects also, which will come at, if you will see in current year. So if the overall pie, if you look at earlier, it was 75-25 or 70-30 in the EPC and HAM. We are expecting a toll also to, or toll awards also to go up significantly in the current year in FY25.
When you say significantly, is there a number to that? What is your estimate for toll collection growth? And do you think it will be led by aggressive rate hikes or it will be led by WPI growth only?
WPI growth hikes are very muted in the current year, so it will be largely driven by traffic growth. So we are expecting, ICRA is expecting around 5 to 8% growth in the toll collection in the current year.
Okay. You also mentioned, a slight shift in terms of project awarding activity. So we understand that NHAI also is now looking at changing the mode of awarding from EPC and other such modes, and largely now looking, like you mentioned, to the BOT tolling. Now, what is the reason for that, and does that also ensure that there will be reduced competitive intensity? Does it keep a few smaller marginal players out of, the larger projects?
The competition is likely to remain high, Vivek, because there are good enough players in the large players also in the segment. So, but again, there will be a demarcation. The BOT road projects, which will be relatively larger in size, will be taken by the much larger players who have much stronger financial flexibility and deep pockets. But if you look at the EPC side, we will continue to see a very strong competition going forward also in FY25.
Right, Ashish, thank you so much for joining us with that take. So FY25, the second half could be strong for the infrastructure and that particular space in terms of ordering activity and execution as well. That's what ICRA is saying. As we slip into a short break, remember to join us live today from 6 p.m. onwards for CNBC TV18 Future Female Forward, the Leadership Circle, a transformative platform where women leaders come together to connect, express and evolve. The circle of trailblazing women leaders from diverse fields will venture beyond the traditional discourse during the course of discussion. This leadership circle is not just about business strategies and professional accolades, it's about delving into the depths of the personal journeys these women have taken.